How you doing today, guys? EK Trader here. I put this particular video together to show you guys and explain what a test is. Okay, professional traders do not like to buy a market up into increased selling. Okay, so if they're bullish, what the test does is it's a maneuver to drive the market down to make sure that there's nobody else waiting to sell. If the market is moving down towards a demand level, uh, if there's any sellers left, they should show themselves here. Okay, just to give it to you real quick, the market comes down. Okay, we went over this in another video. Market goes down, demand picks up, the volume picks up on the demand. Okay, the demand will probably start to peter off a little bit. Okay, the selling is weak. It tests this particular demand level to make sure that there's no supply there, to make sure there's no sellers there to try to drive the market lower. If there were any sellers here, if there's any bears here, normally they would show their face right here. Okay, this is market mechanics 101. This is how markets work. You can check any market, forex, stocks, everything pretty much trades the same. They're going to test for demand here. Okay, how do you trade this particular scenario? Okay, the answer is this, coming from a volume standpoint. As you can see, a lot of people will probably enter the market right here, okay, in this little spring position. They may enter here. If the support line is here, me personally, I like to have my entry right here on the support line, but sometimes the market will drive through the support line and take out stops. That's fine, you know, if you get stopped out. Sometimes it happens. That's okay. It's a painless entry. Okay, so I would prefer to enter here. Some people like to enter here on the high close candle. Okay, which is a little safer, but you just have to give up a lot of room here. Okay, this candle is closing higher than this candle. For a lot of people, that signifies a bullish scenario. But if you do enter there, you want to see higher volume on that next candle. If the volume is low, you might want to wait for more confirmation from another candle. So anyway, on to testing. Market goes up, market goes down, and as you can see, it goes down near the same level of demand here. Doesn't quite touch. In my experiences, this is the situation you want to see. I would prefer to see the market go up, and when it tests, I don't want it to go exactly back to that demand level. I want it to fall a little bit short. That lets you know that there's a lot of buying in this area. Okay, that's gonna let you know that in this area where I just put this line, there's probably a lot of buying there, and that's what you want to see, because it means that they're paying higher prices here. And then as you can see, the next candle is up on higher volume. Okay, so those are the type of scenarios you want to see. What I like to do is I take an entry here, okay, and I usually get out pretty early because I'm expecting the test. I'm expecting the pullback. So a lot of times I'll probably be out around here, but then I can re-enter here, okay, because sometimes these tests don't even go down nearly this far. Sometimes the test might end here, the pullback might end here at the 50% level, and then continue to rise. Okay, so these are just some scenarios you want to see. From a volume standpoint, on the test, you want to see low volume if you're trading stocks. Okay, you want to see low volume. If you're trading options, forex, or the futures market, because this is where a lot of professionals speculate, just kind of like to hedge or add icing on the cake, you want to see high volume. Okay, you want to see a high volume test. Anytime a market bounces off one of these levels, you want to see high volume. Okay, in my opinion. Okay, market bounces off the level, you want to see high volume, higher than average, ultra high volume. It doesn't matter. You want to see high volume because that lets you know if it closes near the high point of that particular level, it lets you know that buyers are stepping in. Okay, here buyers are stepping in. Buyers are stepping in. The sell-off is on low volume. Okay, but for some reason, when prices rise, you know, they're usually on higher volume. Okay, high volume, high volume. Volume decreased a little bit here, which probably was the start of the weakening here. Okay, now if this volume here was strong, okay, if this volume here was strong, you know, notice that it's stronger than the average volume. Chances are good this wouldn't happen. The market would probably continue down. Okay, but what you want to see, prices go down, there's a hammer on strong volume, prices rise on slightly increasing volume. It's not going to always be perfect. It's not going to keep rising on higher volume every time. Okay, and as you can see here, it kind of sold off because now at this point they're expecting higher prices. The professionals are expecting higher prices. The market sells off a little bit, but the volume is low. Okay, volume is low, below average, whatever the case may be, but then high volume again on another hammer. Okay, these are all indications. These are all strong indications. Okay, of a nice up move. Okay. Okay, see these yellow points right here? Okay, this is what you want to see, high volume on these hammer patterns. Okay, it's very difficult for the market to move down at that point. Okay, now just to throw something at you a little bit differently, let's get this stuff out of the way. What I don't like to see, if this pattern, if this market does this, okay, on increasing volume, first of all, hopefully you were smart enough to have your stop loss in place somewhere down here and you got out of the market. If the market is increasing and making lower prices on high volume and it doesn't close at the highs, that's another story. This is telling you that chances are the market is going lower. And then I'll teach you how to trade that when I do the pullback video, if I haven't already made it. So that's it. Just wanted to show you guys that. I hope you learned a lot about volume and how to trade it at support and resistance. Just one more quick recap. Market goes down, pushes much higher volume, closes at the highs. Chances are the market's going to go up. If it goes down, and as you can see, the volume kind of increases here. Okay, it's not going to always be perfect. It's not going to always look like this. But overall, if the market increases as it's reaching this level and closes at the lows, even if it closes here and the next candle closes down, all this stuff is letting you know that it's bearish. Okay. Once again, if this closes here near the highs on the test, okay, and there's a test candle here, and it closes near the highs on high volume, then you know the market is likely going up, and you'll probably get something like that or something like that. Okay, EK Trader Informed Trades Pro, just trying to show you how the market comes down, tests, and how you can recognize this stuff using volume. Thanks for watching.